Hello dear crypto friends, and welcome to today's update video on Bitcoin and the crypto market. So what is going on today? How is the market looking? Let us start in the weekly chart. We see that we are at 21,185 at time of recording, and I mean it's starting to look a bit better. We pretended to make a new low yesterday, but fortunately it didn't happen, which is very good news. What is of course very nice, we can immediately see that we are having a nice hidden bullish divergence. We are getting lower lows here. The candle closes are making lower lows in the 4-hour chart, yet we see that the RSI is making higher lows here, which is a very good sign. So I think a reversal is kind of likely to happen. But of course we shouldn't be happy too early, because you know how the coins are. Now if we look at the volume, we can see this green bar in the 4-hour chart was very nice. It has the highest volume ever. It was a nice buying volume. However, here the selling volume is again too high for my taste. But let's see how the next 4-hour candles will close. I am cautiously optimistic, especially with this hidden bullish divergence in the RSI that we have seen. Now, what will it depend upon if we get a healthy reversal now, and if Bitcoin rises and the crypto market rises? What will it depend upon? And my theory is, friends, which is a bit weird, that this doesn't have so much to do with the Fed. What? But the Fed is actually the thing we thought that is dictating the market right now and dictating how the dollar will behave. And we know how extremely anti-correlated Bitcoin is to the dollar index. I have loaded here the dollar index in orange and in candlestick the Bitcoin chart, and we see the insane anti-correlation. So basically every time the dollar goes up, right? So every time the dollar dumps, for example, here Bitcoin goes up. And we also can see this very nicely in the March 2020 low. The dollar pumps, Bitcoin makes a low. We also see this very nicely here in this double low of the dollar index. What happened? Of course, Bitcoin made the high. And as soon as the dollar started now making new highs here, reaching values that it hasn't seen in 20 years, what happens with Bitcoin? Of course, we go down. So it is pretty simple to see that the dollar and Bitcoin are extremely anti-correlated. Now, my theory is that the Fed doesn't have so much influence on that. Huh? What? Let me try to explain, friends. Let me try to explain. Now, here I have loaded the dollar index. And first, friends, we have to understand what the dollar index actually is, right? And we see that the dollar index is just the dollar versus the biggest and most important fiat currencies in the world. So we have the Swiss franc, we have the Swedish krona, we have the Canadian dollar, pound sterling, Japanese yen, and the euro. And what do we see? It has a 57.6% weight. 57.6%. So the dollar index is basically for almost 2/3 weighted with what the euro is doing. So if the euro is strong, the dollar is weak. If the euro is weak, the dollar index becomes strong. So there's an insane anti-correlation between the euro and the dollar. That is the first thing which is interesting to know. Now, if I go into the weekly dollar chart, friends, and I now compare it to the Fed funds rate, right? The interest rate which the Fed is deciding. Let us just compare this for a second. Now, what do we see? We see that the Fed funds rate has now been climbing aggressively since a short while because, of course, the Fed is raising the interest rates, right? That we do all know. But if we now want to see how the dollar behaves in times when the Fed is raising the interest rates, let us go back, for example, to the 70s and 80s, which is an interesting time. Why? Because that was the last time where we had a similar economic situation, namely stagflation. So we see that the Fed raised here the interest rates, right? In orange is the interest rate, and the dollar index is in the candlestick charts. And what do we see, for example? In the 70s, they raised interest rates like crazy, but the dollar, what did the dollar do? It actually dumped. What? And then in the late 70s, in the next period of stagflation, the Fed raised the interest rates aggressively, and what happened with the dollar index? It freaking dumped. It actually dumped. And then the dollar pumped actually when the interest rates started going down. Or for example, here in the 90s, right? An aggressive interest rate hike here in the mid 90s. What did the dollar index do? It freaking dumped. Now in this interest rate hike here in the late 90s, early 2000s, the dollar pumped together with the interest rates, but then the interest rates went down and only at some point did the dollar go down. Here in 2006, a similar picture. The dollar started first going up, but then, even before we reached the top of the interest rate hikes, the dollar started already going down. And of course, last time in 2014, 2015, in the last rate hike period, the dollar actually dumped brutally. So we see that there's not necessarily a positive correlation between the Fed funds rate and the dollar index. That is crazy. So the Fed is raising the interest rates, and most of the times, not always, but like I would say 80% of the times in the last decades, the dollar index is actually dumping. That is quite a surprising find. So if the strength of the dollar doesn't depend on the Fed funds rate, then what does it depend upon? Well, friends, for that I have loaded the EURUSD chart in orange here. And what do we see? We can see, because the euro, as we said, is flowing in with a weight of 57.6%, we see that the euro is actually the exact mirror image of the dollar index. Look at this here. This is like the exact mirror image, almost like to a ridiculous degree. This is apparent here, like for example, you really see this here is basically the mirror image of this here and this of this. Every time it's almost exactly the mirror image. So we see that the dollar index actually depends strongly, very strongly on the performance of the euro. Insanely, like to a ridiculous degree. So therefore we can make the thesis that the dollar index doesn't depend so much on what the Fed is doing, but on the strength of the euro. And also there's an additional effect. I have now loaded oil in orange, and we see that sometimes the dollar is super anti-correlated to oil. For example, here, that is like the mirror image of that. That is the mirror image of that. But then sometimes it becomes super correlated, right? We see that in some periods there's an insane correlation, and from 2021 onwards we see basically that the dollar is rallying together with oil. Like, this is insane how this correlation suddenly formed. At some point here in late 2020, early 2021, the dollar index and oil started rallying together. Why is that? Well, that is because the US has actually now become the biggest oil producer in the world. What? Yeah, the US, Google it, is the biggest oil producer in the world, produces more oil than Saudi Arabia. So what happened? The dollar is now actually pegged to oil. The dollar is now super pegged to oil, and because of the Ukraine crisis, we have of course now an oil supply shock. So the price of oil is increasing brutally, therefore the dollar is also pumping. So we can say then two things. First, if oil will dump, that will put a lot of pressure on the dollar index, which means that the dollar index will start dumping brutally. Therefore, as soon as this supply shock is resolved and the Ukraine war is over, we can assume that the dollar index will start dumping because oil will start dumping. But we also said that the dollar is super anti-correlated to the euro, because we saw that the dollar index is basically just a mirror image, almost a perfect mirror image of the EURUSD chart. And here I have loaded the EURUSD chart in the weekly, and we see that the euro is actually printing an incredibly nice bottoming formation. Like, this here is a typical bottom formation. I have seen it so many times. Let me just load a comparison for better visualization. Now just look at this here, how incredibly similar this situation is. Here's the EURUSD chart, and here is what Bitcoin did in 2015. We have this same double top dump and then rebound and go higher structure, right? Double top, pump, go down lower, and then probably pump. And what would that mean if the euro would start pumping? Well, the euro is now, of course, also very much tied to the situation in Ukraine. The Ukraine war puts a lot of pressure on the euro because now Europe seems quite unsafe. And therefore people are selling the euro and flocking into the dollar, which seems a lot safer, right? So if the Ukraine situation is resolved, not only will oil dump, and as we saw, that will put a lot of pressure on the dollar index, But no, the euro will also pump because suddenly the uncertainty in the eurozone is resolved. People will flock back into the euro, and since we have seen that the euro is so insanely anti-correlated to the dollar index with a weight of 57% flowing into the dollar index, that means the dollar index will brutally dump. We also have this insane similarity telling us that the likelihood is very high that this will bottom out and then afterwards pump. Now, if you don't believe me, I have overlaid the Bitcoin chart with the euro chart, Bitcoin in orange, and we can see how insanely similar the pump behavior is. So Bitcoin and the euro always pump in unison. Here the peak was together, Bitcoin and the euro. In 2013 the peak was also together. As soon as Bitcoin went into this brutal bear market of 2014-2015, the euro also went in a brutal bear market. Then look at this insane similarity in 2017, the last bull cycle of 2017 where Bitcoin famously hit 20,000. Look how similar the pump behavior of Bitcoin and euro actually is. That is incredible. They almost peaked together here and were pumping together for the longest period of time. And then afterwards, when Bitcoin entered this long sideways-ish bear market phase of 2018-2019, that was also when the euro did the same. And then when the euro started pumping again, the euro reached the high when? Well, friends, in mid-2021. What a surprise. And what did Bitcoin do? It also reached the top here in mid-2021. And as soon as the EURUSD started going down, what happened, of course, that was the time when Bitcoin also started going down. So we see the euro and Bitcoin are insanely correlated, which makes sense because both are very, very much anti-correlated to the dollar index. So I hope I could show you that what will happen now with Bitcoin and the crypto market doesn't depend so much on what the Fed will be doing, but it depends much more on what will happen in Ukraine, because that will decide what will happen with oil, how soon oil will dump, which will drag the dollar index down, and how soon the euro will strengthen. Because if the euro will get stronger, the dollar index will dump. So therefore, it is my belief that the situation in Ukraine is much, much more important for the growth of Bitcoin, as crazy as it sounds, and not so much what the Fed is actually doing. Now, sure, it has an impact. That is clear that what the Fed is doing has an impact. But it is not as high as I have shown you, as many would make us believe. So going back to Bitcoin, our long-term weekly chart, what will happen now in the next weeks and months with Bitcoin will then depend very strongly on the situation in Ukraine, how soon the euro will pump. The ECB, the European Central Bank, has announced interest rate hikes in the Eurozone. That is, of course, already pretty good because that will make the euro stronger and weaken the dollar. And that, of course, will increase the likelihood that Bitcoin will pump. But for Bitcoin and the crypto market to see real surges, the euro must pump strongly, and ideally oil should also dump. If those two scenarios occur, if the situation in Ukraine is somehow resolved earlier than we think, I think that the euro will pump crazily, oil will dump crazily, and that means that the stock market, which is also anti-correlated to the dollar index, by the way, will go up, Bitcoin will go up, dollar index will go down. That is my theory, friends. I hope you found it logical. So that means basically what will happen now, how this thing will be resolved, how fast, if we get a bounce, if we get a longer drawn out sideways period, if we see even new lows here and go to the lower band, to the lower green support line here, which is now currently standing at 15,000. All these things are not really easy to foresee right now because they depend on macroeconomic events, on the situation in Ukraine, on the situation with oil, on the oil supply, on how soon the euro will pump, and these are things we cannot absolutely foresee. So this is the reason why everything is so crazy right now and feels so unforeseeable. But nonetheless, of course, I will try my best to foresee what will happen with Bitcoin and the crypto market. Friends, I'm making daily update videos on Bitcoin and the crypto market so that we can try to understand together what will happen with Bitcoin, with the crypto market, how soon we will recover, when the next big pump will come, and so on and so forth. Thank you for watching, friends. If you found this video helpful, please like and subscribe. I would be super happy to welcome you on this small but growing channel. So then, friends, have a nice day, and I would say see you in the next update video tomorrow. Bye!